Alright, good Friday morning to you, everybody. It is March the 9th, this Friday, last day of the week here for trading. So I just wanted to give y'all a little update. We were had been talking about being bearish, and I have to reiterate that I still have a bearish outlook. That being said, the way that the markets have reacted today with the employment data and the inflation data coming out, it decided it wanted to rally with that. So while I don't necessarily believe in the rally, do have to respect the rally. So that's kind of that reiterating what I said there that one day last week with trade what you see, not what you want, or what you have and not what you want. So we can sit and ask ourselves why all day long, and it doesn't necessarily matter why the markets are rallying. We just have to realize that they are moving higher. I will say though, and I wanted to pull up right here. I had it started here, kind of started looking around as I was talking, but so just to kind of reiterate, and let me zoom this in a little bit closer here, this is kind of the zone that we had been talking about selling into, and we had talked about even this level right here coming into play, which as you can see we have now taken out all those. We were also really cautious because we have been underneath the 50-day moving average for 1, 2, 3, 4, 5, 6, 7 days. So that's generally not a good sign, generally speaking. So, and then also I wanted to mention that so we have this trend line that's falling, and the market will be, and it looks like it will right now, but it does need to close above that trend line to also confirm a reversal. We have our moving averages now in a buy mode, but I will say that we still have a series of lower lows in place. So, we definitely need to take out this 2789 in order to be a little bit more constructive with the chart. So that'll be kind of the next hurdle that we see. If we just stay underneath this, I think that even though that we've regained the 50-day, that we can still roll over. So it's just kind of one of those things that, and I've also noticed, and this is kind of important to note, and we'll see how it kind of turns out towards the end of the day. But so far we are on very weak volume down here. So, and it's the same in the other index from the other ETFs as well. So, yes, we are back on top of our 50-day moving average. We have our 5 and 13 EMAs in a buy mode, but we have yet to take out this swing high over here. So I'm going to. I want to see that happen before I start really switching my portfolio up to go back net long, because what would likely happen would be a push out above it and then a dip back to it before we could continue back to the highs. And it will probably be pretty swift. I don't think we'll get a whole lot of time. So if we clear out of this on Monday or Tuesday, it looks like that it's possible that we would come out of here on Monday. But say Tuesday we get a little pullback, I believe that'll be about all you get. And so I'm not necessarily saying that's what's going to happen. I'm just saying that would be kind of the setup for that. So shorter term here, we'll take a look at the 15-minute chart. You can kind of see that we had a ton of buying volume come piling in here this morning, but it has pretty much waned off now since the opening bell. And we do have, again, we have our moving averages in a buy mode here. They switched over yesterday afternoon whenever that report was about to come out. They look like they wanted to sell it, but they have stayed above it. So looks like we're kind of in a toppy mode right now. You can kind of see how the rate of climbing is turning slowly. So we'll have to just kind of wait and see whether or not this level ends up being the high, or if this is just the end of the week rally kind of thing and we go higher again next week. So I'm going to continue holding some hedges against the downside because I think that we still have a retest of the lows, but at the same time we have to respect the tape, and it's marching higher right now. So with that said, I'll kind of touch on a couple of the trades here, and then I have a good trade for you for a speculative position, but it's a fairly stable speculative position, we'll say it like that. So first one I look at is Kroger. I said yesterday I was buying into it. It got sold off pretty hard on its earnings report. I don't think that report was as bad as what the stock reacted. So it actually tanked about 12.5% yesterday. So I jumped in here while it was bouncing around this 23 level and bought some. Let's see, I think I bought the April calls for that, and I'm just going to double check so I'm not telling you the wrong thing. Yeah, I bought the April 20th $24 calls, so that is a bet that it returns to $24 by April expiration. So I still have a little over a month for this to play out. That position is already up 34%. It was good timing on the buy side. I do think that we could kind of wander around before we get to there. So we'll have to kind of wait and see and let it settle out and stuff, and then we pull it up on a daily chart, and you can kind of see it a little bit better there. So this has had a very nice rally. The stock has from this low up to this high. So we had a inclination that it did need to pull back to some degree. Also want to point out that we have the 50 crossing the 200. We had the 50 cross the 100. So those are both bullish events longer term, and the stock was kind of due for a pullback. It had a nice little rally, and I'll show you it kind of did fail at the support that I wanted to see it hold, which was the 618 retracement, which was pretty much right at that 24 level. But I kind of started looking and noticing that there was also some additional support here at this 23 level, and we find it there. You can kind of see how it had played in multiple instances, being resistance support. This was where it flipped over, then it tested, and then it broke out and held that level. So this 23 level I kind of consider it as a fairly important level, and I think it actually kind of lines up with the 786 retracement. It's a little bit below, so $22 is where that 786. So anyways, I think that it's a buy in between 20 right here at 23. I mean, like I said, I've already bought into it. I will maybe exit a little bit if it looks like it wants to kind of consolidate or retest the low it set. But I think for a long-term perspective, this is a good stock to put in your portfolio to get some food exposure. You got a decent dividend. It's better than the S&P. Valuations are not terrible. They forecast for $1.95 to $2.15 for 2018. So if you just pretty much say $2, then that pretty much makes this thing trade at about 11.5 to 12 times forward earnings, which is a discount to the S&P. So I like that, and it's a stable cash flow kind of company. They are experiencing some margin compression as they try to compete online and e-commerce, and that's kind of weird to say talking about a Kroger, but I think that they will ultimately be okay as a food play and as a staple play. One of the other ones I wanted to mention to you, well, oddly, Pandora is kind of came back. We had this one several weeks ago, and I told you I'd probably just hang on to the calls and let them ride because they had kind of evaporated, but we'll kind of hang on to it as a speculative play. It's kind of wanting to rally back, so I'm not going to be shocked to see this Pandora trade work out after all next week. So we still have one more week for that one to play, so I kind of think that it will. Also, I mentioned buying General Mills. I'm still a buyer of that one, and we'll just kind of show you real quick. It's this $50 kind of been key, and now it looks like it's wanting to set in a higher high. This one gives you a little bit better dividend with almost 4%. It's a little bit more expensive than say like a Kroger. It's a little bit different business, obviously too, but it's a good staple place. So I think that they're buying the Blue Buffalo pet food, is that news broke the other day, so that's what sent the stock down. Here they, analysts kind of think they're overpaying for it. I think that it's a very strong segment of the market right now. The whole pet trend is because people are kind of treating their pets as animals. So I think that that'll continue to play out for the next several years and stuff, and I don't think that we will go backwards on that at all. So that kind of even opens up the door for some of the other ones that I track, and Freshpet is one of the ones that I've watched for quite some time. They have the little fridge foods in your Petcos and Walmart and stuff, and you'll see them here and there and stuff. So it's a growing a growing business, and they're doing pretty good. This is a fairly new company. So not great in the earnings because they're still losing money and stuff, but I think that that for a long-term play on this is one of those two that you can also watch. Now, it is pulling back because the earnings report was a little bit weaker than expected. This is a speculative kind of play, so I wouldn't get too crazy in buying this one like as a major position, but I think this area that it's in, the 18, is kind of pivotal. So I think that if you wanted to take a long shot for the 18 area, I think that you're kind of getting that right now, and you can kind of see how this has been a thing that's been resistance and support and resistance for the longest time, and it violated it, but now it's holding above it. So I think if you stay above $18, then you just go ahead and jump into it. You also have more support at $17 right down below, so I think you can buy this one against those levels and maybe have your stop loss set underneath some of these lows over here, depending on how much risk you want to take. But I think this one will probably be pretty good for a long-term play. Also, the other one I wanted to mention to you was a oil and gas play. This is one that I've been into for several weeks now, and I think it's still got I think it's just getting started, honestly. So NBR, Neighbors Industries, it's like, say, an oil and gas play. It has gotten beat up, and I'll just show you the weekly chart just real quick, just kind of show you that it's gone from, say 30 down to 10 and kind of bounced around up to almost 20, and now we're back down to to 6, almost 5. So this important to note here on this weekly chart. The reason I wanted to show you this, so this low over here was not taken out, so we have a higher set of lows in place. We also have a set of higher highs in place. And even though that's a very shallow channel, it is a channel to the upside no less. So you know, whether or not we just bounce around inside this thing or we actually get a meaningful break, I don't know, but I do like that, and I think that I was just reading their earnings report, and it's a pretty solid earnings picture as well, and financial picture. So you have a lot of buy signals being triggered here recently. Our 50 is above our 100. It is now crossing above the 200. We have our 5 and 13 exponentials in a buy mode. We have new or shorter term speaking, we have a set of higher highs in place. We've taken out this swing high. We set a higher low. So this is a constructive chart, and I like this one. I think that you can buy it. It does offer even a dividend. It's about 3.5%, and the PE is like I say, it is. They're in a losing money situation, but they've got they've got very good prospects, and they're doing some good stuff with management stuff. So I kind of like this one as a longer term play and kind of a speculative play. Like I say, I mean, you don't want to go pouring, you know, half of your portfolio into this thing or anything, but I think you can buy this one and own it. I think it'll probably kind of start getting some legs here in the next couple of weeks. So I'm actually long the March 6.5 calls, which I bought those back at about 6.25 on its test of the reload. So it's in a very profitable position right now. So I'll probably end up rolling those out to probably like May or even June, just because I think that this one's going to continue moving higher, you know, for the next several weeks and months. Okay, guys, I'm gonna go ahead and hop off here for now. I think, like I say, you got to respect the tape. You know, I don't necessarily believe in the rally. I think that there's too many risks out there. You know, the North Korea headline broke last night, and that pushed futures up a little bit. The non-farm or the payrolls stuff this morning. The lack of wage inflation is what the market is taking its cue from. So, you know, it was really robust wage or employment growth, so that's a good thing for the economy, not necessarily for the stock market. More labor costs coming into play, that'll also increase, you know, competition in the labor market, and eventually we will see some wage inflation. So that's kind of giving people worry about 4 rate hikes instead of 3, yada yada yada. But at the same time, we know we're getting rate hikes in the direction of the market, or the direction of the interest rates, or to the upside. So, you know, whether or not we get 3 or we get 4 this year, you know, yet to be seen. But at the same time, the higher is the trend. So I think that the risks are just getting a little bit much, and I think that we need to shake out some weak hands before we can really start making some meaningful moves to the upside. And even then, I don't think that the valuations of the market right now are as compelling as they were, say, a year ago or 2 years ago. I think there's some very selective things giving themselves, you know, the Krogers and the Procter and Gambles are getting sold off. You know, I kind of like. I like the idea that the market wants to go higher, but at the same time, I just can't necessarily back that up with any kind of data to suggest that it should be going higher. Like I say, though, what should happen and what shouldn't happen is really neither here nor there. What is happening is what's more important to us. So I think that, you know, you got to respect it even if you don't believe in it. So that's kind of where we're at right now. So I will be trying to give you all an update over the weekend, probably, because this has been a pretty meaningful week, and so we'll have to kind of revisit our charts and kind of see what some other stuff's going on, and see if this is going to be a head fake or if this is a legit move to the upside. And I'll try to get that together for you here in a little while. All right, guys, y'all have a great day. Hope you're making some money, and I will talk to you soon.